Hello, everyone. Mike Arnold's here, co-founder, Pat Trading Partners, along with Bob Iacchino. So we'll bring on Bob really quick. Can't stick around super long today, so let's get our questions in for Bob. Reminder: tomorrow morning, 7:30 Central, non-farm payrolls. So do keep that in mind. The first post-Fed non-farm payroll. Uh, Mixed map today. Apple just came out a few minutes ago and is up. But this is what I've been seeing a lot with earnings. I mean, Apple did a beat, but if you compare it to their last quarter, it's way down. But they beat their really softened up earnings, but the stock price is higher and revenue and earning per shares are lower than the last numbers. So again, but it's celebrated that it's a beat, not comparing it to where it was. Real estate utilities leading today, financial industrials down, and comm services. Fed watch tool now. Pause in June and then start the cuts going in July. And in a year, I mean, this is as it dropping down. Boy, by next July to 3%. Wow. Off one pullback day and some regional banks issue in neutral mode. All right, as I said, Shopify was up. Apple is well, I can't look right now, but it was up, and those then we had Block, Coinbase. I didn't even look at Coinbase, but tomorrow morning we got AMC for all the apes, and that's really about it. Let's bring on there's Apple, still up slightly. So this is what I'm talking about. Let me just do this. All right. So Apple for last reporting was earnings. Let's see. They reported 188. This time they reported 152. Now the estimate was 143, so it was way dialed back. They reported lower earnings compared to last one, 188. Now this time 152. Revenue last time reported was 117. This time was 94.8. So you can see, but the stock again, way up. So that's just as long as you beat, you're golden with that. Hey Bob, sorry for taking that a little longer there, but that's what I'm seeing consistently with a lot of this earnings stuff.
What's up, guys?
How you doing?
I'm good. I'm just kind of looking at the VIX is definitely broken, in my opinion.
You
I was just looking at the VIX a little while ago, and I thought it's interesting to me that the VIX spiked this week, was down last week, was down the week before, when 2 out of 3 of the weeks were negative on the S&P. So if this week finishes negative, which looks highly probable on the S&P, the VIX is only down this week. So we'll have 2 out of 3 weeks down. And actually, last week took Thursday, Friday rally to get the S&P positive based off those tech earnings, which it seems like Apple has joined in as well. And I mentioned that last week, I think it was Thursday, that this felt like the last dying gasp of a market that's going to be pushed down. The second thing I would look at, the inversions. A pretty successful move. Last time I looked at the 2s, 10s, negative 38. And that would match the lowest close since this thing really kind of dug its heels in, right? Since we
look like right
began
now
that push down
it's
to
minus 40.
all right. So lowest close we've had basically since we began to push down from 107 has been negative 38. So if we finish at negative 38, that would tie it. But that's been the highest close we've seen since we got that negative 107. Prior to that, you have to go all the way back to August of last year to see a close in that negative 38 range. I'm sorry, October. I said August, didn't I? I meant
Mm-hmm.
October. So that's pretty dramatic. And then lastly, I would bring up gold. Yes, I'm still gold. Just so you guys
You are
know, I'm
still
still
gold, or you're still long gold?
I'm still golden. I'm still long gold. I'm still golden. I'm still pony boy, staying gold. You know the movie? Anybody? Stay gold, pony boy. Anyone? Come on. You guys got to know that, right?
What's that from?
Yeah, we'll wait. We'll see if anybody knows. Um, Gold was $3 and I think 80 cents off of its all-time high today's spike. So the pullback I think was completely normal, as people would probably have some profit taking prices up around there. But now we've got really a perfect triple top over time. And I don't have any targets for a triple top. Mike, I don't know if you've ever found anything. I still haven't found anything reliable on
It's
triple top. So I would just go with your harmonics.
I just use the short-term
Um,
harmonic.
okay. So, I mean, in terms of like, I don't have any measured move targets like we do with doubles, but it's definitely often a continuation. And you can see that it can go down quite a bit and still continue and break that double top. It's the outsiders, you guys. Stay gold, pony boy. It's the outsiders. It's where the Brat Pack started their careers for the most part. Not the Rat Pack, the Brat Pack. Talking about Rob Lowe, Emilio Estevez. Um, yeah, some of those guys. Anyway, the kid from Karate Kid, what was his name? You know what I'm talking about?
Yeah,
Ralph
I know.
Macchio. He
I
was in
can't
there.
remember his name though.
Jacob says Boogie Nights. Dude, come on, Jacob. Boogie Nights. Anyway, yeah, so the Fed definitely paused without saying a pause. But I thought the most interesting thing to me was the pushback on Mike McKee from Bloomberg when he asked about the market pricing in cuts.
Mm-hmm.
And first, Jerome Powell kind of avoided the question. And by the way, this was shortly after he lied and said the banking system was solid, right? U.S. banking system solid, no real problems. I think when he said that, he was talking about the big banks. He also said something that I kind of thought was horrible. He basically said that he likes regional banks. He thinks they serve a purpose in the economy. Then he subsequently mentioned how they've gone from 4,000 to about 4,500, and also reiterated the banking system was solid while we watch um, Western Alliance and Pac West get completely destroyed. Completely destroyed. That Pac West chart, oh my God. Horrible. Look
Yep.
at that thing.
Yep.
Disgusting. This is one of those things where people are like, it's down so much. Shouldn't I buy it? I've had people text me that. Pac West is down so much. They're going to save it, right? Well, maybe it goes away completely.
Maybe
And
it's
with Jerome Powell saying, go ahead, Mike.
maybe it's FDIC Friday.
Yeah, I mean, it's just ugly. It's really ugly. So it seemed to me to be very deliberate that they didn't talk about, the Fed doesn't have unlimited money to save the regionals, but yet the Fed chair said he believes the regionals serve a very large purpose in the economy, that they're very important to the economy. They're just not systematically important. I added that last part. He didn't say that. I added the last part. Um, they're important. They're just not systematically important. So when he says the banking system is solid, he's talking about Bank of America, J.P. Morgan, Morgan Stanley, Goldman Sachs. Um, he's not Citi. He's not talking about U.S. Bank Corp. I mean, look at U.S. Bank Corp. U.S. Bank Corp is so big that it's almost a mega bank. It's just short of being a mega bank. It's like 700 billion, somewhere in that range. Just shitting the bed right now in terms of their performance. Not as bad as the other ones, but just awful. Awful. So it's a contagion.
Well, you think we're gonna start cutting in July?
No. That's the thing. Like, so okay, let's go through a couple things about this. Number one, if he starts cutting, he's given up on inflation. And that's why I think he was so adamant about it. He's saying, okay, we're going to let inflation go. Did you see the one, Mike? Did you see the one reporter asking him if they would accept 3%? And he just kept saying, well, our mandate is 2%. Our mandate, we look at 2%. Yeah, but how about 3%? Would you accept it? And he's like, we're 2%. He just kept pushing back on the guy,
Mm-hmm.
which leads me to believe one of two things. They're either not going to cut rates, they might pull back on reducing the balance sheet, which would likely help, but they're not going to cut rates unless we're in a severe recession and the unemployment number spikes, which means we might have a surprise non-farm payrolls number tomorrow. So just the way that he pushed back, you could have a surprise non-farm payrolls number tomorrow, but he did not sound like he was going to give up on the inflation fight just because these regional banks that he likes may go bankrupt. He
And
loves them so much.
when you say surprise non-farm payrolls, you mean a like better than expected?
Yeah, a better than expected non-farm payrolls because he was adamant. No, we don't see cuts coming with Mike McKee. I mean, even the point where he didn't answer it at first, and then Mike McKee jumped in at the end. He goes, "Yeah, but what about the rate cuts that the markets are pricing in?" And he just basically was like, "We don't see rate cuts at this point." Now, if you look at what the market has priced in, you just showed that a second ago, Mike. The market's priced in a level of rates that we haven't seen if you take this last rate hike cycle out since 2008. 2008, and the market dropped 40% when rates were that high. Now, I'm not saying that's going to happen again. I'm going to say that even if all those rate cuts are correct, it takes, correct me if I'm wrong, it's the last time I looked at it, Mike, it takes the Fed funds rate to 275 to 300 by the end of 2024. Okay, if that's the case, that'll be the highest Fed funds rate since 2008 if you take the rate hike cycle out of the calculation. Do we actually believe the market is ready for that? That's the way, A, to fight inflation, and B, that's a comfortable level for stocks, considering that stocks have existed on cheap money and buyback over the last 23, 24 years. I just can't put those things together. So anyway, that's all I have.
That's all. We got Pavneet wants to know what happened to oil yesterday.
Well, it didn't just happen to oil yesterday, Pavneet. It wasn't just yesterday. Take a look at a crude oil chart. Okay, I'm sure Mike's going to put one up as I'm saying that. If you look at a daily chart of crude oil and you call yesterday the only thing that happened, you're not paying attention because basically crude oil has fallen over the last 16 days. It's only been up 6 of the last 16 days. It's fallen 10 of those. That's number one. Number two, the total fall from close to close is 17.5%. So it's not just yesterday. Okay, crude oil has been falling on the idea, in my opinion, that there's going to be weaker demand based off of recession. That's what's been happening to it. It's not just yesterday. Matter of fact, you look at yesterday. Yesterday was down 4.25%. The day before was down 5.29%. So again, the yesterday is what I'm taking issue with here. Okay, I mean, even though the day before was down more than it was yesterday. And even today, I'm looking at crude oil futures. It was down all over 7% before it recovered. So, and again, the volume was not big, not compared to the previous 2 days. The volume estimate is about 386,000 contracts. In the futures, prior day was 471. Day before that was 396. So the down days were much bigger in terms of volume. So be careful.
Follow-up questions. You think further oil production cuts can be announced by OPEC?
They can be, sure, but I think they'll be left alone for now because I think OPEC likes to hurt U.S. production, and this does. As we get lower and lower, it hurts U.S. production. So I think they'll probably leave it for now. The other thing you have to know is like seaborne Russian crude. Russia announced that they were going to cut production. They didn't. Their March numbers for April numbers for their seaborne crude reached almost 4 million barrels a day. They've only reached that level twice in their history. So they're at highs for seaborne crude. So they're exporting a lot of crude oil. So there's a lot of crude on the market versus what's being perceived as a much weaker demand picture because of the economy.
Are we going to refill the SPR?
I hope so. They can claim victory if they can refill it soon. I doubt they bought any on the lows today, which again was right around their number. What was the low? 63.64 was today's low.
Yep. Uh, let's see. What Pep wants to know. I'm confused how non-farm payroll will affect gold.
If non-farm payroll is strong, the Fed will hike rates and lead to recession. Then gold will go up and vice versa. Theoretically, but right now nobody's looking for the Fed to rehike rates, no matter how strong non-farm payrolls is. Besides, I didn't say that we're going to get a surprise non-farm payroll higher and that's going to rally gold. It'll probably keep gold right about where it is, but still nobody. If you just look at the Fed funds curve and what it's showing on the CME Fed Watch tool, nobody believes, regardless what that number is, that the Fed's going to hike rates again. They may move the cuts back out to September, but they're not going to all of a sudden start pricing a rate hike in next month. You know what the probability of a rate hike next month is right now? 1%. A little bit more than 1% last time I looked. So if you click on the current,
the probability of there is no probability of a rate hike next month. There's a 4.5% of chance
probability
of cut. What was that?
So nobody's pricing cuts in or hikes in, Pep. They're gone for now. So I wouldn't worry about it.
All right. John A wants to know if Wall is the next regional bank that's going to collapse.
Possibly. I look more toward Pac West. I think Pac West is worse. Pac West also might get rescued. They might consider Pac West to be systematically important because it's a big California bank with a lot of Democratic donors. That one might be systematically important to the reelection campaign. I'm being cynical here, I get it, but I just really got mad when Powell said he thinks the regional banks perform a great service to the American economy and then just basically let them shit the bed. And I'm not saying they should bail those banks out, but there should be windows that they can borrow against, and there should be preemptive moves. If these things are important, there should be preemptive moves. No matter what you think of the Fed, they're smart enough to know that hiking rates this quickly was going to put some banks underwater in terms of their hold to maturity assets. And the regulators should have been in there doing something about that shit. They should have been doing their jobs. Now, a lot of people say, and they commented on this yesterday in the press conference, that there's a separation clause at the Fed between regulatory responsibilities and monetary policy responsibilities. But don't tell me they don't talk about it. That doesn't pass the smell test. So when the Fed was serious about going this aggressive in rates, the regulators should have been out there on their horses like the Pony Express saying, you guys got to do something because this is going to be bad. And they weren't. They didn't.
I mean, the regulatory breakdown from the Fed makes it look horrible at night.
Yeah, it does. And there's a lot of people out there want Mary Daly's head because of what's going on out in California with these banks.
I think they should.
California's ground zero for this crap.
And it's all on her watch. You know what? Yeah, she's not the one looking, but she was more worried about ESG stuff and you know what?
And DEI.
She's all out there, racism rather than running the banks.
Exactly.
Come on.
Enough of this crap now. Anyway.
No. That's what pisses me off. And this is what pisses me off about the Fed overall. You know, there's very little accountability. What accountability was them from all the trading they were doing? What accountability was them with inflation was transitory? Oh crap. No, it wasn't. What accountability is there for anything, even from the regulatory side?
Mm-hmm.
There
There's
isn't.
nothing.
So it's a complete joke. Uh, Paul wants to know why oil prices are back to lows from last November, but retail gasoline prices to continue to race higher.
All right. So retail gasoline prices are not racing higher, first of all. Hang on, let me pull it up because I just looked at this today. All right, maybe in your locality, they haven't come down yet. Okay. But today's national average is 357. Yesterday it was 358. A week ago it was 363. And a year ago it was 422. Okay, that's regular national average. Now, there could be a little bit of a different dynamic where you live, but the national average is number one coming down. Number two, you have to understand that gas stations buy in bulk for periods of time and they pay the going rate. And your average gas station chain doesn't hedge in the gasoline futures at the CME. Okay. Your average chain doesn't do that. You know, they're not out there with ULSD trying to hedge their gasoline exposure. So they need to work. Okay, Paul, when you say last November they were 275, now they were 3, look where crude was last November. I mean, you're comparing it to November. It's kind of a weird thing to say. But number one. Number two, gas stations buy in bulk over periods of time. Okay. They don't buy every day matched up with crude oil prices. First of all, they buy from refineries, not from crude, it's not based off the price of crude. Okay. That's number one. So when they buy that stuff, they need to get through what they've used. Okay. So last November, crude oil prices were falling. They were buying cheaper and cheaper gas. Okay. The refineries also weren't busy because we were still coming out of COVID lockdowns. So gas was cheaper for them. Now, with crude oil prices having risen from basically the lows in March to the highs in April, they're still working through that supply, and refineries are a heck of a lot busier. The refinery utilization has ramped up back into the 90s. That's something that I watch very closely is refinery utilization. Okay. Now, diesel, as George just said, the price of diesel is declining because diesel demand is declining, but automobile gas is not declining yet. As a matter of fact, it's ramping up. So when you look at crude oil prices and say it should be coming down in the pump, it's just not that simple. It's not that simple. By the way, I'm not defending anybody. I'm sure that gasoline companies, if they can get away with it, will drop much more slowly. Okay, if they can get away with it. But in larger municipalities, they can't because the other gas station races them down just as quickly as they race them up. So if crude oil stays here, they'll come down. But it's more a refinery problem than a crude oil price problem.
Bro wants to know, Bob, why is the market still down after Apple beat?
Isn't that like what we talked about from the second that Mike turned my microphone on?
And here's another thing.
Tech will not
Sorry,
Tech will not hold up if the broader market falls. Okay, one stock will not hold up the entire market. If the broader market falls, even those strong tech companies, even in the market cap weighted indices, will fall.
Also, as I said, I compared it to last quarter earnings. Yeah, they beat, but their revenue's down. Their earnings per share is down. On an inflation adjusted basis, their revenue's down 8% year over year. That, yeah, you can beat, but it doesn't mean they were strong numbers. One of the games is you dial back expectations so much, and then people just look, oh, it's a beat, buy it. But it doesn't mean the numbers were good. Start comparing the trend of the numbers. They're still falling. The numbers aren't that strong. Now, Apple again announced another buyback. That's share buyback, which whatever happened to innovation versus just buying back shares at this point?
That also won't drive the indices higher if one company announces buybacks. And you're very welcome, Paul. But that won't drive the indices higher. That'll just put a higher base. Because believe me, I mean, if they're announcing buybacks, if you think Apple doesn't want to buy it back a little bit cheaper, they do. They're not necessarily going to crowd in to hold up their stock, you know?
Can you decipher this one, Bob? Can you read that?
Mike Bob, the article I sent in Discord yesterday, do you think those experimentation has
Oh,
anything to do with the regional bank wipeout? I didn't see the article. Did you see it, Mike?
no, I have been way too swamped with stuff.
Yeah,
You
I
elaborate?
didn't see it.
Uh,
Experimentation. I didn't see it, so I don't know.
what else? All right, let's see. Let's just anything else. Otherwise, I have to wrap this up because I got to go through a couple things. Other than that, we're recording a
No,
podcast
I'm
tomorrow
good. I'll
too,
let
right,
you go in
Bob?
case you gotta look at I'll let you go in case you got to look at one or two more charts. I'll see you guys all Tuesday.
Yep. Thanks,
See ya.
Bob. All right, just real quick. The double top has been confirmed but not triggered in the S&P. It's the official close now, so not triggered in the S&P. Okay. Now, does that mean it can't get a bounce tomorrow? Easily, we could get a bounce tomorrow, but it's still not triggered. So that's why I'm watching it. In the Dow, however, it is triggered. Now, the Dow, the major resistance is 33,450 area, the breakdown area. So the Dow is triggered. The VIX officially triggered a double bottom. So let's see. With that, what else do we have key today? NASDAQ has triggered no pattern and closed still above the 62 and a half. Notes, again, retesting the high area and in the range for, again, triggering the double. I'm going to see how if this triggers again on a weekly basis tomorrow. Dollar index, again, not doing much. We already looked at crude. Euro, we can look at some of these tomorrow. Euro still holding the rotation zone. Pound still holding. It still has a potential double top in place. Tesla still stuck in a sideways range. Russell, again, tried to break down earlier. Still, this is interesting though. Even with this breakdown, look at the close on the Russell. Lowest close since it closed lower back on Thursday, October 22nd. Every other close has been higher since then. So this is the lowest close since October. Again, does not mean it can't bounce on a Friday, but this was not able to regain the key support area and still close down with weekly cycles rolling over on the Russell. So this could be a multi-week pattern down. So we are daily and weekly tops. Daily is getting closer to the, let's just look at the best one to look for is daily is still heading down. Weekly will be heading down should be heading down for multiple weeks. So it's probably going to be in pretty, from my perspective, look for sell rallies opportunities on any rallies. I didn't even see Carvana's earnings. What? I mean, this thing will eventually zero out. Again, on any rallies for this thing, I look for the roll over play in that. What else do we have? That is about it. Watch for a pump. We could easily bounce back tomorrow, but you know it could be short term oversold, but not from the key one I follow. It still has a little bit to drop, but then we can get some downward pressure. I will be shocked if in the next week or two we don't test the 200 on the S&P, taking us back below 4,000. All right, everyone, I got to wrap it up for now. I will be back tomorrow morning and we'll take a look at non-farm payrolls and see if there's any decent setups going into Friday. With that, hope everyone has a wonderful evening. Talk to you later. Bye for now.